Dear students, you're all welcome for today's video presentation. This is Suresh Babu from GFGC, Government First State College, Gauri, Bangalore. Let me make it very clear. Corporate accounting, redemption of preference shares is the chapter that we are dealing with. But the unfortunate thing is not many students could send the homework solved in the form of scan copy. I do not know how many of you really have done the sum. How do I witness? At least you should have mentioned in the feedback. Let the feedback be very unique. Now you write thoroughly what you have observed in the first 2 minutes, second 2 minutes, and the third 2 minutes, and so on and so forth. See, when you observe the video for 10 minutes or 15 minutes, then you pay attention to each and every minute's content. Then you practice, write it, practice, revise it. Then you tend to not to forget. You will not be forgetting at all. Intention is learning. Of course, learning has to happen. You have to recall it whenever it is very much required. Okay? So learning can happen, but the learning could happen only when you students, dear students, have the interest. Okay? Not because of some of the instructions you watch and forward or follow. No, it's not like that. The zeal should come from within, which is the need of the hour. Try to realize this aspect. You're not actually helping any of us by watching the videos, getting education. It is empowering yourself. Okay, let me take another sum. Yes, illustration number 2. The instruction is the redemption of preference shares when they are partly paid up. Okay, so partly paid up, you cannot actually repay them. Redemption is not possible. It has to be converted into fully paid. Journal entries to be written. Then the preference share capital along with the premium will be transferred to preference shareholders. And you make, as per the instruction, if there is further new issue of shares, you will make it, collect the money. So sufficient funds are not available. You can sell the sundry assets, collect the money. And yes, so a nominal amount to be adjusted. If it is available in reserves, distributable reserves, then transfer such an amount to capital redemption reserve. Then the premium, pay out of securities premium. Then towards the end, after ensuring the money that is available in the bank, then you can redeem the preference share. Yes. On asset side, sundry assets, bank, 5 lakhs and 2 lakhs, total 7 lakhs. On liability side, see, share capital 40,000 equity shares of rupees 10 each, 4 lakh rupees. 1,000, this is important, 1,000 redeemable preference shares of 100 rupees each only. But 75 called up, see, 1,100 means 1 lakh, correct? Pay attention. 75 called means 75,000 only called up. So only they have recorded this year, 75%. Then how much is the difference here? 25,000 is what? Still in arrears. Sorry, not in arrears. They have not called. Final call has not been called. If you call final call, you'll be getting 25,000. Then this 75,000 becomes 1 lakh. 100 rupees it becomes. Okay, then you can go for repayment of the capital to the preference shareholders. Profit and loss account, this is 1,30,000. It is divisible profit. Creditors 95,000, total 7 lakhs. On 1/4/2021, preference shares were redeemed out of divisible profits. Okay. So preference shares were redeemed out of divisible profits only. No issue of equity shares. You are required to pass journal entries and prepare the balance sheet after redemption of preference shares. Okay. So this is just assumption. What is this? Partly paid up has been converted into fully paid up. See, the final call on preference shares was made on 1/4/2021 and the entire amount was received by 15th April 2020. This is what the assumption you need to make. They won't specify. Why? Because partly paid up preference shares cannot be redeemed. They have to be converted into fully paid. That means 25,000 rupees to be received. See, first journal entry. Preference share final call account data to preference share capital account 25,000. As this I have already explained. Correct? So, being preference share final call money due on 1,000 preference shares at 25 rupees each. This is due. Okay. Now, for receiving bank account data to preference share final call account 25,000 debit, 25,000 credit. Being final call money received on preference shares received recorded. So that means partly converted into fully. Now, this fully paid preference shares capital has to be transferred to preference shareholders account. Preference share capital account data to preference shareholders account 1 lakh, 1 lakh. Earlier it was 75,000 the balance sheet. Now it becomes 1 lakh rupees because 25,000 is received as final call money. Correct? No? Being the amount due to preference shareholders on the redemption of 1,000 preference shares recorded. So now, what did they say? In profit and loss account, see, this is available 1,30,000. We need only 1 lakh rupees. No further issue of shares. Now, such an amount equivalent to nominal value to be transferred to capital redemption reserve. So, profit and loss account data 1 lakh rupee to capital redemption reserve account 1 lakh rupee. This is the formality you need to follow. Being the amount of 1 lakh rupee from the account transferred to capital redemption reserve to the extent of nominal value of 1,000 shares. Shares, okay. Now the money is ready with you. Then see the balance sheet. Okay. Cash at bank is 2 lakh. You need only 1 lakh. Then you can repay. Preference shareholders account data to bank account. 1 lakh, 1 lakh. Preference shares redeemed. What is the uniqueness in this, sir? Uniqueness is new issue of equity is not being made for the purpose of redemption of preference shares. Then where did this money come? This money is coming from revenue reserves, divisible profit, that is profit and loss account. Okay. So now, scenario you see in the balance sheet, you need to reduce 1 lakh rupee, correct? Because you have already paid. So that means asset side 1 lakh rupee, liability side 1 lakh rupee has to be reduced, correct? Let us see. This is what vertical form of the balance sheet. Okay, balance sheet. As we know that redemption of preference shares does not amount in reduction of authorized capital. So that is the reason why while writing the balance sheet liability side, 40,000 equity shares, 1,000 redeemable preference shares, both have to be recorded first because this is a vertical balance shareholders funds, share capital, authorized capital. 40,000 shares of rupees 10 each, 4 lakh. 1,000 preference shares of 100 rupees each, 1 lakh. So here, don't forget, you need to draw this line and this will not be taken into account. This will not be taken into account. This should be written. That is a formality. Now for us, what is very important? Issued and subscribed capital. So called up and paid up capital, equity, there is no change. 40,000 equity, 10 rupees. Okay. Then what is missing here? Missing 1,000 preference shares. Don't write here. Why don't write? Because their capital, we have returned. The company has returned, repaid. You will not continue here. Okay? Yes. Then the second heading, reserves and surplus. In the balance sheet, go to balance sheet, liability side, we check it. So there is profit and loss account. How much? 1,30,000. But what did you do? 1 lakh rupee from this account transfer to capital redemption reserve. How much balance will be available? 30,000. So that has to be shown here. Now see. So reserves and surplus, capital redemption reserve, new reserve we have created 1 lakh rupee. Then the remaining profit and loss account balance is 30,000. Okay. Then non-current liabilities, secured loans, unsecured loans, nil, since it is not available. Current liabilities, creditors, 95,000 total, 6,25,000 on liability side. Now come to the asset side. Asset side, non-current assets, heading, fixed assets. See in the balance sheet, fixed assets, how much? 5 lakhs. There is no change. So no change, right as it is. See, 5 lakh rupees, fixed assets. Cash at bank, you have 2 lakh rupees. I have told you very clearly. Last journal entry, see. So in the last journal entry, how much has been used? 1 lakh rupee. Reduce it. So then the remaining balance to be shown, 1,25,000. Then you may be wondering, sir, 2 lakh is available, 1 lakh paid, correct? So, but you have recorded 1,25,000. Correct? Difference is 1 lakh. But plus partly paid up shares converted into fully paid up, correct? There you are getting 25,000, correct? Now you are having 1.25 lakhs in the cash at bank, correct? Okay? Yes. So what you do? Slowly we'll go. So that is the reason why multiply by 3 times. This is the homework. Homework. Okay. How? Let me write here itself. So all these amounts multiplied by 3. Multiplied by 3. Okay. Here. 40,000 don't, yes, 40,000 multiply by 3. But 10 rupees keep as it is, same. 1,000 multiply by 3. 100 rupees keep the same. Okay. 75 called up, same. So here also into 3 times. Into 3 times. Amount becomes into 3 times. Into 3 times. Into 3 times. Okay. Understood? Yes, please rewrite. Same 1 for 2021. Make it 1 for 2022. Same instruction, you write. Okay. Same instruction. That's it. Do this homework today. Whether you have done it or not, please mention in the feedback. So after each 2 minutes, what new point you have actually learned, please mention in the feedback. So thank you for watching. Yes. Take it very seriously. Send the feedback and update your comment positively on my YouTube channel. Let all your friends please subscribe, like, and share. Hit the like button. Okay, thank you all.